Gold's about to crash. The dollar looks to scream higher, and bonds and small caps are at a critical juncture. All that and more on Sunday Night Charts, where we take a look at the charts to help you with the trading week ahead. I'm your host, Steven Van Metre. Thanks for joining me today. The moving averages, colors on your screen: 21-day red, 50 days in green, 100 days in blue, 200 days in tan. Price versus momentum. Price is a general direction. Prices are at momentum is a rate of change. A bullish indicator for both is positive, and a bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is the level buyers can't break, and support is the level sellers can't break. Or resistance is where the sellers are at, and support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of a trade, help with time of trade, and provide direction of the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's start out with the S&P 500 as we look at the percentage of S&P 500 stocks above their 50-day moving average. As we mentioned last week, they would rebound off this -2 standard deviation move on the one-year chart. They did, taking the S&P 500 to a new all-time closing high. But notice, as it makes a new high, it's not taking the whole index with it. And that's a problem when the generals are leading, but the troops aren't. Price will eventually head the other direction. Let's take a look at the percentage of stocks in the S&P 500 above their 200-day moving average. Again, not confirming this move higher. So what you're seeing is the breadth of the major indice is weakening, as again, a smaller number of stocks are leading and more stocks are starting to head lower. Let's take a look at the price versus momentum screens. We see on 21-day moving average, price is heading back up, and on the 50-day moving average, the rate of growth is speeding higher, and in 1 week, we go from below the 9, 21, and 50-day moving average to back above them. Very bullish move there. Everything else looks the same. Let's take a look at the S&P 500, symbol SPY, and we see new all-time closing high sitting right in this sell zone for the moment. It's still a sell zone. Now, if the S&P can break out of this and head higher, then this will be confirmed as another buy zone. But with corporate share buyback blackouts ending or starting on Friday, well, as the close of Friday, that is, those are over. This could spell a move lower for the S&P. Keep in mind, for the SPY, support is at 435, and right now the sell zone is still a sell zone until it breaks through, which it does look poised to, but the breadth is super weak. Let's take a look at the Nasdaq 100. Here's a percentage of Nasdaq 100 stocks above their 50-day moving average, also not confirming this move higher. It did kind of bounce off a level we've seen before between this -1 and -2 standard deviation on the one-year chart. It didn't get any deeper. I thought it might, but it followed the S&P 500, bounced a little bit. No new closing highs for the Nasdaq. Let's say look at the percentage of Nasdaq 100 stocks above their 200-day moving average, and it didn't really confirm. It bounced a little bit off that same area it did before, just below this -2 standard deviation. But again, telling you that most of the Nasdaq is not playing suit, as we see only about 55% of the Nasdaq 100 stocks remain above their 200-day moving average, and that is weak. Let's take a look at the price of momentum screens following the S&P 500. 21-day moving average turning higher. Momentum on the 50 days picking up. Now back above all the key moving averages. Still below where it was 1 month ago, but that's not been a big deal for any of these major indices for a long time. Let's take a look at the Qs, and here we see sitting in that sell zone, very clearly defined sell zone at the moment. In order for this to become a buy zone, price would have to break higher. But again, with corporate share buyback blackouts kicking in and the Fed set to taper, keep in mind your support is at 367. That should be your key focus going into next week's Fed announcement. How about the small caps? Let's take a look first at the S&P 600. Percentage of S&P 600 stocks above their 50-day moving average, also not confirming a move higher in the S&P 600 index, which, unlike the S&P, did not make a new all-time high, and unlike the Nasdaq 100, didn't even get close to it. But we see breadth continuing to weaken, but however, it did bounce off that -2 standard deviation area. You'll notice when it gets near these negative standard deviation zones, you tend to see bounces. But check this out, the percentage of S&P 600 stocks above their 200-day moving average, not their 600-day moving average, 200-day moving average, bounced at the -2 standard deviation level and got nothing, just ran right out of gas. This is trending lower. What we're seeing is about 45% of the S&P 600 small cap above its 200-day moving average, and that is weak. That is a bearish indicator. Let's take a look at the price and momentum screens on IWM, now picking up the Russell 2000. We see the 50 and 100-day moving averages have turned higher. It's now back above its 9-day moving average. And in what a strong move, the 3, 6, and 9-month momentum are all negative and rising. But the price action, well, not so great on IWM. Let's take a look and pull it up because small caps came back down. Let's zoom out, hit the great zone. Here you can see what I still think is a topping pattern. What do you have up here? This is called a bull trap. Why is that? Because the bulls got excited, took it up here, and the sellers came in and said, ha ha, we got you, and sold it right down. Notice the 2-year volume profile line, very, very strong. Price came back below it, and beneath it, tagged support, rallied up into that volume profile where we're seeing clearly sellers are above that. You zoom into the 1-year chart, where do you see? Sitting right below that volume profile line. Again, on the 1-year chart, that's telling you where the sellers are at. This is bearish for small caps. And keep in mind, here you see a 6-month chart, same thing. Small caps lead the large caps, so if small caps aren't going to rally here, they're eventually those large caps run out of steam. Let's keep it going. We've got the transportation sector, oftentimes a leading indicator of the large caps. Only thing flipping here is we see momentum picking up on the 50-day moving average. Beyond that, it's now back above its 50-day moving average. Along with that, 6-month momentum, which is great for a lot of algorithms, is positive and rising. So let's see if there's some promise in IYT to back up these moves in the big caps, and where there it is. And let's zoom out to the 1-year chart. We see that beautiful support seen at 249. Clearly there is a buy zone down here. Buyers came in. You have what appears to be very early signs of a double top, but the 50-day moving average is trending higher. You look for a cross of the moving average and confirmation. Well, it confirmed against not a perfect confirmation, but it held the 200 and 100-day moving averages, then shot back up above the 50. This is technically a bullish picture for IYT based on just those moving averages alone. However, the 21-day moving average is starting to signal a roll down move. There's clearly a sell zone right up here at 270. So keep that in mind. You've got the buy zone down here at 249, sell zone, not cell phone, up at 270. Let's keep going. And what do we see here? The energy sector. This is really interesting because the energy stocks are not telling you what you'd see by looking at crude. We'll take a look at both. Of course, momentum on the 100-day moving average moving higher, slammed back above all the key moving averages. 1-month momentum, negative and rising, not a big deal. Let's first take a look at crude because crude's going to tell you something interesting. And what it's telling you is on the 1-year chart, the buyers are at 65. So between 62 and 65, you're getting buyers there. So when it dips down there, that's where the buyer's at. Now let's go to the 6-month chart and you see where the seller's at, 72. So what this thing did is it slammed right into sellers, and sellers were there. So for the moment, this ball is in the seller's camp. Now, if we go and look at XLE, we had this beautiful little rounding top. You got what was a little bear trap down here where people started selling it, and then the buyers came in and shot it higher. Looking at what crude is telling you, the stocks should probably roll over and head down here as people are bullish on the stocks. But remember, commodities usually lead the equities. So in this case, I have kind of a bullish tilt on XLE. Let's zoom forward with the financials. Price momentum unchanged, back above its 9-day moving average and its 100-day moving average. And we see apparently we've got a little error on the 1-month momentum, but not a big deal because we're not staying there long. Financials tell us the story we already know, and that is it found support where the banks are buying their stock back. What a shocking surprise. So despite all the bullish notion for financials, they ran up from this buy zone into a little sell zone, came down, and of course, corporate share buybacks certainly boosted that, helped out there. Trend looks to be coming back down into that buy zone, which with the blackouts coming now, hard to say if that will hold, but people are super bullish on the bank, so wouldn't surprise me if it does. How about the industrials? No change on price and momentum. Now back above all key moving average, 3 and 6-month momentum rising. That is a positive sign. This has been following those large cap indices, and we see very clear design. This is a massive actual zone up here. And this is pretty tight. So the question is this a buy zone or a sell zone? Because it gets down here a little on the lower side of it, and the buyers come in. And then up here, you see the sellers. So this is a sideways pattern like we're seeing in IWM. Your call if it's a buy or sell zone. It's so tight. I'll just say there's no call on that. All right, let's keep going on to the utility sector. All green on price and momentum, above all the key moving averages. 3-month momentum negative and rising. Everything's going good for the utility sector as a potential risk off sign. And let's zoom out because you've got this upward trending pattern. Looks great. It keeps holding its 200-day moving average, which is great. And then every time the utilities get up to the $69, $70 range, they get sold. So you can clearly see the buyers are stepping in at higher and higher and higher levels. So that's bullish. You've got this beautiful 2-year volume profile line telling you where the average price is being traded on 2 years is at 64. So plenty of support. Look for sellers to come in here because that's where they've been at. And that is the key. There's plenty of buying in here, but where are the sellers? Will they show up again? Well, they've been there. My guess is you'll probably see them again. How about gold miners? Remember now gold looking to crash. Miners, well, not in any better position. Momentum on the 21-day moving average slowing down, but still below all the key moving average. The only bright spot in this is the 6-month momentum, which is a key for a lot of algorithms, is negative and rising, but the chart still not pretty for GDX. Let's pull that up here and let's zoom out. 2-year chart. I mean, are you convinced that this is a bottoming pattern? It still looks like a topping pattern. Look at that 2-year volume profile, 34.36, telling you where the sellers are at. Let's zoom in to the 1-year chart. Same thing, 34.36. That's where the sellers are at. And what do we see on the 6-month chart? Oh, sellers are at 32.59. The buyers couldn't hold that either. And we'll zoom back out. What does this tell us? This thing is breaking down. Gold mining stocks should be back and revisit 28. I know many people say they're buying there, but hold tight because if you see a wave of selling, as the shorts get kicked out here at 29, or the longs get kicked out at 29, the risk to GDX is continued downside. You get a potential liquidity event, and there's a lot of downside potential for the mining stocks, but save that for later. They crash. That's where you want to be. How about emerging markets not giving the gold miners any help? Price momentum still bearish across the board, although 1, 3, 6, 9 month, 12 month, all negative and rising. So perhaps there's some bit of hope because remember, you're going to see GDX and EM kind of move generally in the same direction together. In this case, 6-month volume profile is above. So sellers clearly above at 50, about 51 here, telling you that there's no upward getting through that ceiling. Looking at the 1-year chart, sellers at 54, and on the 2-year chart, they are down below. There's your, so you know where your support is at 44, but that's where the price is likely to head based on everything we see here. All right, let's keep the momentum going on to high yield bonds, not giving us any sort of exciting news for equity markets. Remember, our junk bonds tend to be a leading indicator of where the broad equity market is going. Price momentum negative, back above its 21-day moving average. Good sign. 1, 3, 6 month momentum negative and rising. So the momentum signals are trying to pull this thing higher, but will it work? Let's see. Let's take a look at HYG. 6-month chart. You can see the sellers all the way up there at 88. How about the 1-year chart? Sellers at 80, a little over 87, not good. How about the 2-year chart? Above that at 87. This is a bearish picture. This is looking like it looks for the moment like a bear trap bringing up, but I'm thinking this is going to be a bull trap as the buyers step in and try to buy this up and get rejected. Overall, you look at this big chart here. See how this is rounding up? It looks like it's rounding and going to head lower as the sellers are clearly unloading here. The only question is how much inventory do the sellers have to feed into the buyers who just can't get enough of high yields until they'll have too much, and then they'll have no one to sell to. How about the long-term Treasury bonds, TLT? Of course, we know the bond king loves him some duration. Price momentum all green, below its 9-day moving average. 1 through 9 month momentum positive and rising. A lot of good things happening with TLT, and this is kind of at a decision point for TLT, because what we had is a bullish move here. Sellers came in, hammered it down, but look at the 6-month volume profile, staying just right below. So it came, screeching into this heavy zone of buying over the last 6 months. Let's zoom out to the 1-year chart. Came again as it came down right into, think of this like a bog or a swamp where you just get sucked into the mud. And as these sellers jammed in there, the buyers just soaked it all up. And there it is on the 1-year chart. You see it again on the 2-year chart. It's all sitting right there as inventory on the long bond is getting bought in every which possible way. 5 years way out there. 90-day is sitting there right at the 90-day. So, you can see where the buyers are clearly at. The sellers haven't been able to breach this at all. Coming up to the Fed meeting, which is usually bond bullish as they accelerate the taper. There's no wonder people are buying here. They know what is coming. All right, let's move on to gold futures. Again, not a pretty chart we're going to look at. Momentum on the 21-day moving average now slowing down, trending lower. 3-month momentum fighting. You look at this mixed bag. Price, momentum, moving average. Everything's kind of messy. It gives you no direction for what's going on in gold there. But the chart certainly does. 6-month, you can see sellers remain just below 1,800 where they've been. How about the 1-year chart at 1783. Now those are turning into sellers, moving it a little bit lower on the 1-year chart. 2-year chart right around 18, just below 1,800. So what do you see here is clearly selling. This is not a bullish chart. Look for gold to head lower. Break 1750. You got to shoot down to 1678. Breaks that. Floors out. Risk off. That's what you're looking for. And then you come back in wherever that bottoms and look to buy that. All right, how about silver futures? Almost all bearish across the board. 6 and 9 month momentum turning higher. Silver still in a lot of trouble. Let's take a look at silver. Looking at the sellers at 24 over the last 6 months, dominating there. How about the last 90 days? Sellers dominating at 24. Looking over the last year, sellers at 26. So all these people that are crazy bullish on silver, what they need to be bullish is at 18 because that's likely where price is headed. And you can see this. Here was your buy zone down here at 24 to 25. Sell zone up here. Sellers went out, and the buyers are capitulating and turning into sellers. Price headed down. Look for 18 because that's probably where it's headed next. Let's move on to the U.S. dollar, the king dollar. Price, momentum, bullish, now below its 21-day moving average. Everything looks green. Dollar is about to still on the edge of breaking higher. Everyone's holding the dollar, trying to keep it down. We even see speculators getting long the dollar. And what do we see? Just sitting right below this zone, this 97, where sellers have been. And you can see they're just holding it here, maybe waiting on that Fed meeting before this ratchets up higher. 100 really will break things apart. But anyways, 97 still where the sellers at. Let's look at UUP because it's very clear. 2-year, you can see the volume profile, 25, 28. So everyone is negative on the dollar, but you can see a perfect kind of bottoming pattern here. And where's the neckline? It's right there, 25, 28. Look at that. There's your neckline. That's where necklines come from. So this is super bullish for the dollar. Look for it to head higher. It's got to break through this $26 range on UUP and then get up to 27. All the wheels come off the equity bus. And with that, thanks for being fans. Thanks for supporting the show. We'll see you back on Monday. The content of this video provides educational information only. It's not intended to provide investor advice. It shows not to be construed as recognition or solicitation by selling security, financial instrument, or participate in any particular trading strategy. This video was prepared by Steven Van Metre. Personal capacity. Opinions expressed in this video that I do not reflect the value of Financial Advisors Inc. or Steven Van Metre Financial.